You probably haven't realized that the concept of insurance is much older than you think. It dates back to 1750 BC. Today, insurance is a $9.8 trillion industry, and this figure is going to keep on growing as the industry becomes bigger. Now look, insurance is everywhere we look, and it might seem like a modern practice, but it's always been part of the human story. So it's important to understand the history and the origins of insurance. So here's the thing, insurance may have emerged at the same time as long-distance trading. In addition, like many other financial concepts, it may have its roots in debt. As early as 1750 BC, we have recordings from Babylonia relating to bottomry. In this concept of bottomry, a ship's cargo could be pledged in exchange for a loan. But what made it different from a regular debt was that the repayment was only applicable if the voyage had been successful. This protected the ship merchant from potential financial loss. And as for the loaning party, they got more customers. Hence, the money that they made from the interest generally offset any losses from cancelled loan repayments. From the Middle East, bottomry spread to other trading societies, including India by 600 BC and Greece by 400 BC. In Greece and later in the Roman society, this took the shape of a written agreement, a written contract, and this was a tipping point in the history of insurance. The insurance would be deposited with a money changer, which was basically an ancient equivalent of a banker. The merchant would then withdraw the money when he suffered a loss. So essentially, insurance as we know it today had formally begun at this stage. But then we have this pretty big moment in history, the fall of the Roman Empire. And like with many other financial practices, this concept as a formalized insurance contract would not survive the fall of Rome, at least for that time. You see, with the fall of Rome, you have the loss of centralized power and a concrete code of law. So instead, this led medieval businesses to create unique practices of finance on their own, and this included how they insured themselves. And one of these methods was guilds. Members would pay their dues to the guilds, and the funds collected would act as insurance. So, if a member's practice burned down or he was robbed, the guild would cover his losses. Some of the guilds even offered some kind of life insurance. So if a guild member became disabled or killed, the guild would support them or their surviving family. This type of insurance is still around today, but today we call it group insurance. But these guilds were not where the modern concept of insurance emerged. Rather, it came from a very unlikely place, a coffee house in London. In the 17th century, trade between Europe and the Americas was flourishing. However, it was not without its risks. You had pirates, storms, enemy navies, and various other hazards. So the lenders and traders would often meet at coffee houses to negotiate agreements. And here's the kicker. The agreements would be underwritten by the coffee house owners. Eventually, they began to evaluate risks for themselves. And this gave rise to the modern profession of underwriters. In particular, one of the most notable underwriting coffee houses was one owned by a man named Edward Lloyd. Lloyd's Coffee House became a very popular meeting place for merchants, ship owners, and others looking for insurance. This was thanks to Lloyd's ingenuity. He would collect shipping information he heard and then shared them in a publication. And soon enough, his coffee house became the place for those in the trade. Eventually, a formal system of insurance was developed. Merchants and companies would meet with venture capitalists seeking funding. In return, these venture capitalists would find colonists to take to the New World, and the portion of the goods the colonists would produce or find in the Americas was guaranteed to these venture capitalists. Now, the next step was that after the terms were agreed, those parties would go to Lloyd's Coffee House, and then they would hand over the ship's cargo manifest. Basically, this was a document detailing the list of goods that would be shipped, and it would include information about which ports they would visit. Lloyd would then hang up this agreement for everyone to read in his coffee house. Those interested in the venture could sign at the bottom of the manifest, indicating how much of the cargo they were willing to insure. This type of insurance greatly aided England's shipping industry. A ship on voyage would have multiple insurers. This would help spread risk, ensuring that no party would suffer a significant loss if something bad happened. In this way, it helped merchants and investors to take on even more ambitious ventures. Another breakthrough in insurance came in 1665, this time in the neighboring country of France. Blaise Pascal, who by the way invented the calculator, and his colleague Pierre de Fermat came up with a discovery. They found a mathematical way to express probabilities in a way that helped people back then understand risk a little bit better. So this made it easier for insurers to undertake risks with a better understanding of the probabilities. What this did was make insurance even more affordable because it formalized the practice of underwriting. Now you're probably aware of London being burnt down in the Great Fire of London in 1666. Well, it was just after this that the first recorded instance of fire insurance was established, and many companies jumped on the bandwagon of insurance around this time. The next century would see an explosion of insurance companies, offering all kinds of securities to the public. However, this was at a time before there was any kind of regulations or oversight, so many of these were fraudulent schemes meant to fool people and run away with their money. Still, it was during this time that two important insurance companies were formed in England, and those were the London Assurance Corporation and the Royal Exchange Assurance Corporation. These two companies marked the beginning of the modern insurance industry, setting the benchmark for all subsequent insurers. Since then, the insurance industry has gone through some pretty important changes over the centuries. For one, unlike in the past, the insurance business today is much more fail-proof. Today's companies have access to vast quantities of data and research, and that means they're able to process them into useful insights. What that means is that they can tailor their products to ensure that their profits remain high, but it doesn't mean that the customer is always getting the short end of the stick in the process. Better statistical insights translate to lower risks, and that in turn means less cost of premiums, which actually benefits people. So compared to the past, there are a lot more extensive regulations in place, which makes fraud much less likely, and it protects consumers a bit better. Now, of course, there's a lot more that can be done to improve the sector. We've seen great strides in how insurance companies operate, but of course, there's a lot more that can be done. For one, there could be greater transparency in these companies, there could be more protection for users, there could be less monopoly in the insurance market, and so on. But the point I'm trying to draw is that insurance as a concept has gone through so many phases over centuries, and it's a very old concept, and the core principle of it still remains the same. It's interesting to think that all the way back in 1750 BC to the coffeehouses in London a few centuries ago to modern times, one thing is always consistent. The upside is always to the insurers. Centuries of innovation and inspired thinking in the realm of insurance have done one thing very well, and that is to ensure that the insurers end up safe and profitable. You see, without this core concept, the insurance industry will just fall apart. The concept doesn't work anymore. That's why what was true in 1750 BC is still true today. That's why it's important for us to understand the roots and the origins of industry and how they came about centuries and centuries ago.